Owning real estate has many huge tax benefits, whether you own the property as your primary residence or an investment. I'm Tim Hamilton with StellarQuest Real Estate, and in this video we're going to be discussing the tax benefits of owning your home as a primary residence. We'll make a second video where we discuss the tax benefits of owning investment property, and you can find a link to that video in the description below. Please keep in mind, I'm not a tax professional, so this video should not be used as tax advice. If you're seeking tax advice, I would recommend speaking to a CPA or tax attorney. If you itemize, the first expense you can deduct is the interest you pay on the mortgage. For loans issued after December 14th of 2017, the deduction is limited to the interest expense on up to $750,000 of your mortgage, and the loan must have been used to buy, build, or substantially improve your property. Since most people have a mortgage less than $750,000, they can expense their entire interest payments on the loan. Any entity or individual in which you paid more than $600 in interest to is required to give you a mortgage interest statement called a Form 1098 from the IRS. This will tell you how much interest you paid during the previous year. When you itemize, you can also deduct your property taxes. If you pay your taxes through a lender escrow account, then this number should be available on the 1098 form that they send you. If you pay your taxes directly, then you'll have to calculate this number yourself. If you purchased a home in the prior year, don't forget to include any supplemental property taxes you paid and any taxes you paid through escrow to reimburse the seller for taxes that they prepaid. Keep in mind, under the new tax law passed in 2017, the total of your state and local tax deduction cannot exceed $10,000. My favorite tax benefit is the capital gains exemption when you sell your home. In order to qualify, you must have owned and used the property as your primary residence for 2 of the last 5 years. The maximum exemption amount is up to $250,000 for a single individual and up to $500,000 for a married couple. You can use the exemption multiple times, but you can only use it once every 2 years unless you've had a special circumstance that qualifies you to use it sooner. In order to receive the maximum exemption for a married couple, only one spouse needs to meet the ownership requirement, but both spouses need to meet the residency requirement. It is also key that neither spouse has used the exemption previously within the past 2 years. There are also some special circumstances, depending on how you've used the property in the past, that would only qualify you for a partial exemption. So if you're thinking about selling a home and you want to know if you qualify for the capital gains exemption, I would recommend speaking to a tax professional. When you're analyzing the tax benefits of owning your home, it's important to compare the total amount of the itemized deductions you can take to the standard deduction you would get if you didn't own the home. If you want to learn more about any of the topics we discussed, please feel free to let us know, and we can send you some great information we have that was put together by the California Association of Realtors and the IRS. If you're thinking about buying or selling a home, please feel free to let us know. We're happy to answer your questions and help in any way that we can.